everyone to the Property Show. We are switching our debate day and bringing you the realty debate at the start of the week because of a big development which has the potential to alter the course of real estate sector in the country. Securities and Exchange Board of India, or SEBI, has cleared the rules for property-backed investment vehicles, known popularly as REITs, to be listed on Indian exchanges. This move comes as the much-needed breather for commercial real estate in the country, which has been depressed for some years now, a result of weak demand and slow economy. Today on the show, we look at the status of commercial office assets across the country and get the expert panel to forecast demand, supply, rental trends and quality of assets, all with the purpose of arriving at the one big answer we are seeking. Will REITs be a winning proposition for all in India, including investors, not just developers? Let's welcome Irfan Razak, CMD Prestige Group and past President CREDAI. Also Sanjay Dutt, Executive Managing Director, South Asia, Cushman and Wakefield, India. From Mumbai, Sunil Rohakale, MD and CEO, ASK Group. With me here in the Delhi studio, from the right, Amit Grover, National Director, Offices, DLF. Parry Singh, Co-founder and Senior Managing Director, Redford Capital. Vishal Kumar, Managing Director, Xander Finance. Gentlemen, thank you very much for joining me. And today, look at the panel, two of the biggest landlords in office space in the country, DLF and Prestige, represented on the show, and so are the two PE funds who have the ambition of bringing REITs in the country. So let me start with Parry Singh, rare, or actually the first time we've been able to drag him on the show simply because of REITs. So look at the SEBI rules, Mr. Singh, and tell us, does this now give you the indication that between Singapore, Hong Kong and India, three markets that you were considering, you will go with REITs in India first?
I think it's first point, lovely development. It's much needed. The first deal that Redford did in India was an office development alongside with their fund of Prestige in 2004. The building's taken as time takes in India. It's a 7-year pregnancy in India, usually to build a building, sometimes 8. And now we have a park with Irfan that's almost 2.5 million square feet, just that building. We have a pretty nice collection of assets outside of that. Now, there's a lot of things that make a REIT very successful in a country. Obviously, REIT is basically a tax. It's a taxation status, really. It's a tax pass-through. And we've been waiting for it for a long time. I think clarity is awaited, but it's much needed. It'll help drive the demand for commercial assets. It takes a long time to build a great commercial asset and to lease it. And one of the things that we are hoping to see is how the lease tenancies change as a result of this development. But we're excited.
Will they change?
We've been fussy from day one. We look for longer tenure of leases. You'll see that as every asset that I've been involved, or we've been involved in as an investor, we've always looked for lease terms over a smaller lease term period. So we haven't done typical leases, but they were designed for REITs.
All right.
So remember, Redford is an institutional-only investor. So we run several, more than several $1 billion. We have a lot of commercial real estate. We don't really talk about the amount and size.
We need you more often on the show to start talking about them. But okay, so overall, you're pleased and you think, again, you've not answered that one big question. So now India first, right? Because you've declared your ambition to choose either of those three markets.
Absolutely. I would say that the liquidity, it'd be great if we need a lot of developments. It needs real estate equity analysts to come aboard, which we haven't seen yet. Obviously, there's a lot of following for what Amit's going to talk about, for example, for bigger public companies that exist. But there's public equity analysts needed in real estate REIT space, which we don't have as yet today. Between the choices of countries you narrowed out, India, Singapore, and you could think even outside of that. And I would say people have done this already in Singapore, and they've done well, and let's just say questionably, because India is not considered Asia for Singapore, for example. Maybe it is, maybe it's not.
Okay.
Sometimes I've gone to Singapore and they think of India as a part of Europe. I'm just joking. But
okay,
it could be.
That's the first time I'm hearing that, but all right. So I'm still not getting a straight answer, but okay, we are assuming that it has to be India. Amit Grover, a lot of excitement, years of struggling to try to get back to the same rental yields as you saw in 2008, and the market hasn't even climbed back, long tenure, tenancies, all of that. How are you viewing this development from a from your asset point of view, you have a basket of 28 million, which everybody is saying is probably the first beneficiary of this development. What do you see?
So with 400 million square feet of grade A space today, out of which 200 million square feet is, I would call it a AAA space, which is ready to be transferred to the REITs today. What's also the point is that the maturity of the market has come pretty much of the age. In today, most of the tenancies is with very mature captive multinationals. Out of the 500, top 500 Fortune 500 companies, 150 have already opened up captive centers in India. Another 100 has to go in the next 2 years. Now look at it from the tenancy which you're creating, which is very much similar to your long-term tenancy for US markets.
Right.
And then at the same time, the value proposition which the buildings have graduated, and the whole asset class which is developed in its own maturity. So today, the tenants are talking about high value infrastructure along these buildings, safety, security, a complete ecosystem development, engagement. So in true sense, both from a REIT as a developed assets, as well as the expectation of the customer, have made the whole asset class move to a much more matured position.
You really think so? You think there is enough good quality assets to make not just one or two initial star REITs which list, and after that the quality of assets starts dipping? What do you think, Vishal?
No, I think that companies like DLF and Parry and firms like us or Prestige have over the last 8 odd years, if I'm not mistaken, developed about 330 million square feet of grade A assets, which is a good enough bulk to start with, and this development will probably prompt developers to further improve the quality of their buildings, because at the end of the day, the better the building, the better the valuation, the easy its ability to get into a REIT structure, and the better the rent growth and capital appreciation over a period of time. So it's going to result in a gradation of quality of assets, and the good boys will be separated from the bad in a matter of a few years.
How many good boys are there?
No,
seriously. So if I look at the list of beneficiaries and from the report, GLL report, it says DLF 28 million square feet, Prestige 8 million square feet, there's Phoenix Mills 6 million square feet, Blackstone 22 million square feet. Who would believe that you would have Blackstone becoming one of the largest landlords right after DLF maybe of this country? You have Brookfield at 15 million square feet, K. Raheja Group at 15 million as well, Embassy Group at 15 million, and then of course there are combined assets of Embassy and Brookfield, and RMZ Group at 13 million square feet. So, if I look at the figures, Amit, they look really, really large. Your own portfolio is very large, but how quickly and how soon will you be able to move them into a restructure, and what are some of the compulsions that you might face before you actually do so?
Well, actually, the initial moves and by the RBI are welcome, but I think there is a path still to go on the detailing on the tax structure. First is the initial capital gain exemption and moving the entire portfolio to the company.
Right.
And then obviously there are larger areas around. A larger portion of the REITs portfolio is still with the SEZ. So what is the MAT treatment within the SEZ will be one area, and then the dividend.
Still issues which are fairly tangled, Vishal?
Yeah, lots of clarifications needed. Stamp duty, income tax, capital gain tax,
Yes.
some things on withholding tax, the balance income tax in the hands of the resident unit holder. So it's lots of clarification needed. I think it will come over the next 6 months. More importantly, everybody still has to guess or at least get their minds on pricing. There's still a lot of gap between what developers or sellers, in this case, expect and what buyers, investors such as us or retail investors expect. And that gap is going to be measured and filled over a period of, I guess, at least maybe a year and a half. And it's going to take some time before we see the first real impact of this development.
Okay, Mr. Razak, SEBI's rules for REITs, have they met all the expectations? In Bangalore, we spoke about it. We said hugely positive development, and a week later, we are actually saying, all right, the rules are out. What do you think, sir?
Yeah, the rules are out. I think it's in line of what we were thinking, except a few more things like stamp duty and a little bit more on taxation that needs to be clarified. I think, but we are more or less getting there, and that's a good one. But it's again, It's an opportunity.
Or how big is it an
Now,
opportunity
it's all
for you? I mean, so Mr. Parry Singh was talking about the first office space he developed with you in 2004. As it's maturing now, it's been a 7 to 8 period, and how perfect the time is for REITs in this country. Would you agree with that, or do you? I mean, other than the taxation issues and all the cost of transactions involved?
Yeah, I think that if you look at the timing perspective, I think it should be perfect for Parry. I heard him talk, and I think he must be feeling really top of the world just now. Because he was even thinking of listing it not in India if REITs hadn't come, maybe somewhere else. But it's good that it's happened here, because then the entire opportunity happens for India. The money stays in India, more money comes into India. It also affords an opportunity for the small retail investors to invest into REITs.
All right. We'll
Actually,
come to the...
believe you me, our company, we also
Go ahead, sir.
running a REIT, so unstructured REITs,
You've been
where we
running-
sell undivided space to our investors, and then we manage the property for them, we lease it, sublease it, all of that stuff. But I think this is a big opportunity for the smaller retail investors.
Absolutely, except that kind of business does very well in South India, sir, where developers like you are dependable. In North India, those kind of unstructured businesses are fraught with risk for investors. Sanjay Dutt, various estimates have put the Grade A office stock at approximately 375 million square feet, out of which about 80 to 100 million may be up for REIT listing. And I'm going to keep adding the figures because I want you to corroborate whether this figure is right or not. This could generate cumulative rentals of 60 billion rupees with a potential capital value of 600 to 750 billion. My God, these look really mouth-watering. How accurate are these?
So I think the figures that you earlier mentioned about the portfolio size of key large developers in the country was accurate. And given the new size of the REIT listing that the government is now thinking, you can certainly add about 20, 30 more developers contributing cumulatively close to about 10 to 15 million square feet across the country.
Okay.
So that's where it is. I doubt whether it will be 600, 700 billion, but I think eventually once you do office REIT listings and once the confidence picks up, the market behaves properly, the regulatory is clear, the retail investor gets tax-free income, and there is a clarity around the whole subject in totality, you will see shopping centers, you will see many other opportunities, and of course the 40 million square feet that keeps getting built every year will start coming into the same kitty. So eventually it's a large game, but may not necessarily on immediate basis, except for these the few developers and the large private equity funds who have built a portfolio in the country.
All right, so which one do you think, Sanjay? Because I know the developers will not say it, neither will the PE funds. But do you think Embassy, Blackstone will be the first ones to be off the block?
I think wherever you have a fund like Blackstone, they would like to wait for full clarity on the regulation. So unless you have everything spelled out by the government clearly, yes, they would be ready to list, whether they are the first one or the last one or the second one to list. I think the local developers who got their act together, they've been very keen to offload this portfolio, would perhaps be the first one to go. Local, well-established office development who actually have asset management portfolio practice, like Irfan was saying, they've already been managing these for a very long time. So they would have much more confidence to go first than the second and third. But if the regulatory is completely clear, it could be anybody.
All right. Sunil Rohakale, I have not come to you simply because you have a totally residential portfolio. Are you wishing that you had an office portfolio and you perhaps should have taken that step some years ago?
I think India is largely development-oriented real estate country rather than income-yielding assets country. And I only thank God that these kind of regulations have only come in post maybe global crisis and not really ahead, because I feel in commercial real estate, it's a very fragmented market. A lot of experiments have been done by the developers, by the investors into this asset class, whether one need to lease it out, whether one need to do a strata sale, one need to really do an office building, one need to do an IT building. So I think there was enough confusion in that market. And if you really look at the whole segregation of the spread of this asset class, it is all concentrated in few cities like Bangalore and Mumbai and Delhi. And you can name few hand-counted developers in, say, Pune and maybe Chennai could be there. So I think I'm not at all unhappy about not getting into the commercial real estate in the past, because it saved solid labor. And I think we rode the ride of the residential development, which is in line with Mr. Modi's 2022 housing for all. But going forward, this is a very significant asset class. So I think it was a one lane where it was only one entry and there was no way to come back. And I think the lane is now open for the other side as well. So I think this will help definitely unlocking the value of the asset. Some of the balance sheet which probably got, these assets got stuck there. Some of the banks who are sitting with these assets will release a lot of money to real estate. I think overall I'm feeling very good about this development of REITs in India.
All right, I know that I must take a break, but there's a really important question. Pari Singh, come in here. You know, we keep talking about the fact on how distressed balance sheets are going to get repaired with REITs coming in. And guess what? As capital gets released and as capacity gets released, we're going to start seeing a construction boom all over again. Hyperbole, little bit of reality, or no reality at all?
Well, I'd say what's good for our country. You see, if you look at our economy, we're getting a lot more growth in our service business. Service business needs real estate, commercial real estate, residential real estate. And we're getting a lot of urbanization, both of which need a lot of commercial real estate. I think it's really good. Now, the example I gave with Prestige, Irfan and us, we built the project together. It's taken us 8 years to develop a nice commercial asset of 2 million plus square feet. Takes that long to do in India. Not saying it's faster, but to build and yield and get to a point, it's like a long tenor. The baby's pregnancy is long. So now the question is, what's the cost of money while you're pregnant? You can't really afford that much of an interest rate. Now that would come down if the leverage ratios were to change, which is what happens in the rest of the world. The leverage ratios are much higher. You can borrow more. And the loans are a little bit more flexible. We haven't seen that in the country. I think we're looking forward to that development. And yes, with great partners, we had a great partner with Prestige and we love them. We had a lot of financial stability to bring into projects, and especially with a private equity firm like Redford. We did bring that in, but we need the market to mature, and we're looking forward to that. But I think it's a great opportunity for REITs to come in, because it's going to release a lot of equity and leverage into this market. Now, REITs are twofold.
Release capital. I mean, if you're saying leverage, it will. What do you think, Vishal?
I think
But will it help repair balance sheets of, let's say, a company like DLF very quickly? How long will it take? Is the big question.
The whole regulation, at least from a tax front, has been designed to deleverage balance sheets.
Right.
I don't think that anybody actually, if you read the text of the tax pass-through carefully, if you do not have leverage in your books, you actually will be probably undervalued than an asset which has a lot of leverage.
But it's very important to note that we have hybrid REITs coming in India. So they're not just equity REITs, they're not just mortgage REITs, hybrid REITs. The regulation basically is already opened up to both things. Debt leverage mortgage, which is debt, and equity.
This is getting a wee bit complicated for the investor or anybody who is looking for that answer. If I have 2 lakh rupees and now that REITs will be opened up for me to invest in, does it have potential to give me the returns that I'm looking at? I mean, does it have the potential to beat inflation and become a better hedge against inflation than gold? Remember, that's a asset class that Indians are just absolutely fond of. So we have to look at REITs versus gold. We know that it should and hopefully do better than bank fixed deposits in terms of giving you regular income and also perhaps some capital appreciation. So we'll come back and look at some of those factors critical to make REITs a success for investors.